Good morning. Mic check, 1, 2. Let me know you can hear me in the chat. Let me know we're good. What's up, Mike? Can you hear me okay?
Oh, hi. Sorry, I was looking at the different screen.
Oh, okay. No worries. How's everyone doing? How you doing, bro?
Doing good. How are you?
Pretty good. A little out of it today, but the show must go on. Just just one of them days. How about everyone else? How's your trading day, Mike?
Not much. I had a sale on Euro USD today, but it took me out and then dropped. So it's been choppy.
For sure. I know the vibes. Let's so you got a presentation for us today, huh?
I do.
What is it gonna be on?
Portfolio diversification.
Sweet. So we could look at pairs and then we could go ahead and do the presentation and call it a day. But yeah, let's go ahead and look at some pairs real quick. Anything in particular? I know you said you had took Euro USD.
Yeah, it's been choppy. That second leg at 1.01 level. That's the one that took me out. But frankly, I do think it's gonna play around the 1 level because it's such a strong psychological level. So
Definitely.
I let it
You
do.
know it wasn't just gonna cleanly bounce off of 100 without collecting orders. I'm sure there are hedge funds or, people who take one trade a year who got a pending right there.
Yeah, exactly.
So yeah, definitely. I agree they're going to work that 100 level. So, but yeah, definitely still bearish as for all the USD pairs.
Yeah, USD CAD. I didn't expect just the straight up move. I was waiting for a breakdown to 1.292 and then up, but it's like nope, just going up.
Did you have a pending order?
No, I was just waiting for like a structure to form, and I was just I just waited for it to break down, but instead it just went up like straight up. So I was like, all right, I guess I'll skip you.
What's up, Ross? How you doing, bro? You want to come on the panel with us? Join the StreamYard. No, you be up in here. Yeah, I mean, it has a lot of room to go.
Yeah.
So, I mean, tomorrow's Friday, so we're probably gonna trap into the week, but who knows? But yeah, let's see, because it could be more buys for tomorrow, or maybe it, play around for the end of the week and then next week. I'm not sure, but it's Thursday, so I try to be careful. Like by Thursday, usually I'm trying to be done with all my major moves. You know what I'm saying? So we'll see. We'll see. I don't like getting trapped on Fridays at all, and I hate when the day starts ending and you're just hoping for a move, and it's like you're battling against the clock. I rather just be free to let the trade have some time. So that's my theory about
Oh yeah.
trading at the end of the week.
Yeah, walking away is an art, you know.
Yeah. It can be tough sometimes, especially you really want to make your money back, or you really think a trade's going to go somewhere, or you see some price action and it starts to induce you. So it's really important to just, stick to your rules and stick to your system. If you have a 3 strikes you're out policy, really take that, really stick to it. I think that can save a lot of traders. And maybe you get stopped out twice on a setup and your rule is you can't trade it a third time, and then the third time it just shits the bed and you could have made all those pips, and that can mess with you. But you just got to kind of be okay with that, and just be okay with sticking to your rules and your system. It sounds like we talk about it a lot, but it really is, so important. And I think that's the difference between successful traders and non-successful traders, is just the ability to follow directions and, stick to the guidelines, and not try to, do your own thing a lot of times, and deter from like what the actual goal and plan is, like, strategy hopping, or you see something one trader does with some indicator or some type of setup. So now you want to learn that and do that. And, now you added an eighth confirmation or confluence to your setup. So you need to really just find your identity, work on finding your identity, and stick to that crap,
Yep, I agree.
Yep. And that's what I try to help traders with, with my sessions and all that stuff. And I still get traders hitting me up. Like yesterday, someone was hitting me up just saying, can you just give me one setup, sir? Like, just tell me one trade and I'll be able to grow my account and I'll be good. And then I'll, buy some services from you. And I'm like, learn while you earn while you learn is bullshit, bro. You have to learn. And I don't know, what are you trying to scam? And I just like, do my free playlist. And I'm like, make sure you're at the live stream because we can go over setups live. Like, you don't want to pay to be in a session with me, but
I mean, there's a lot of stuff that you have put on YouTube and it's free. Like, like what else?
yeah, it's just like they want you to do it for them. They don't, and that's the thing. Like, and they don't realize that they're doing anything wrong. Because I know when I first got into this business, I thought that copying signals off a signal website was considered trading. I thought that was it, But once you learn what the game really is, it's like it's not what you thought at all. So I think some people already realize that. Maybe they had some previous knowledge of the industry, but or they kind of start to get it as they learn the industry. But I think some of us just hold on to this fantasy of the finding the holy grail, and just chasing this perfect system or perfect something, and you never get anywhere, because it's kind of like the saying, you fall, stand for nothing, you fall for anything. So the market going to constantly trick you. So standing for something is having your trading system, right? Your belief system that you impose on the market and how you perceive it. And from there, you can execute. And just knowing that no system is foolproof, there will always be a component of randomness in the market. With knowing those two things, don't even chase a holy grail. Chase finding an edge, and find something you could repeat over and over. So if it's a setup that only happens, once a year, once a month, it might not be the setup for you, right? But not to say you need 10 setups a day, but you at least need to have a few a week. So approach things logically, approach things systematically, and stay the course. Stay the course, even if You have a bad day, a bad month, a bad year. Stay the course. And the tough part is going to be, can you withstand things? Can you, one, make sure you don't blow all your money in the process, get into debt, lose your family, your wife leave you, right? Lose your car. If you stand back in your mom's basement, chasing trades, gambling. So, like in everything, education is everything. And just approaching things with that right mindset. So yeah, we, if anyone wants us to look at pairs, post it in the chat here. It looks like we got a small session today. Not many people. My apologies for not promoting it and sharing things in time, but this will be on, some evergreen content for the YouTube. So this will always be there. And, this will be something to help people. So with that said, I think we'll go ahead and get into Mike's presentation on portfolio diversification. And what I'll likely do is chop it up into its own segment as well. And, maybe just kind of feed this content out, feed the gems out to people. So yeah, sorry to talk your ear off. I will go ahead and let Mike take over the floor from here, brother.
All right. Let's see. Please stand by.
Yes, sir.
Let me move some screens so I can see what's going on.
Okay.
All right. Actually, can you hide the the two thumbnails? Yeah, yeah. And I do have the the logo on every slide in case somebody wants to take credit. All right, so let's start. I'm gonna wing all of this. So if you have any questions, just stop me or wait for the end. It's about 10 to 11 slides, so we should be in and out for like less than 20 minutes. So anyway, why do we want diversification? The main reason is because of inflation. And for those following like any financial news and just year to year, you know that inflation, first of all, is a tax on everyone in addition to all the other taxes that we pay. And the government is looking for 2.5% every year, and every year it's different amount. Also, inflation is different for every person because just like Dixie, it is a basket of different things, and these different things are valued with different percentages inside this evaluation. And I've been following it closely since 2020, and every time they um, change the percentages and the items they will consider under the official um, inflation. And every single time, the real number is higher, which is horrible because the real life inflation is even more than what they say. And this is just money that just going away. So we want to stay ahead of this. And as you can see on this lovely chart of the US dollar, starts in 1792 and then comes to about 2017. But trust me, this keeps going up. The Federal Reserve which fun thing is that it's neither federal nor a reserve, but it's a whole different rabbit hole. Their job is to keep this thing as flat as possible, and they're doing a splendid job in all of that. But it is what it is, and we need to adapt for this. I have included, this is a Bitcoin to USD chart, which is the reverse of the one that we usually look at. And you can see that if this looks like a hyperinflation chart, which is what it is, and so is this one. So if you're wondering why prices of everything is going up and you cannot afford a house like your grandparents for like $5,000, this is why. It's simply the value of money is just going away. All right, moving along. So this is America's finances as of 2021. As you can see, green is the tax revenue for the country. We have some surplus, tiny little bit surplus. And then we have the deficit spending, and then we have the debt. Debt is well over 30 trillion at this point. And this debt is what MMT, modern monetary policy, is basically running on. And this is why the government wants constant inflation. As inflation, this constant inflation essentially allows them to run such a massive debt. And this is just bad for the little guys, like the average people, because it creates the Cantillon effect or Cantillon effect. Not sure how it's pronounced, but essentially it's exactly
Is
as
that the
the
trickle
picture shows.
down? Is that
Yep.
trickle down economics?
Yep.
Bullshit.
Yeah. So I'm not gonna go into MMT and like the details, because this is gonna take for like another hour just for itself. But basically, it boils down to inflation is not instantaneous. When money is printed and it's shoved into the system, prices don't just automatically go up. They go up with time. The problem is that the people that are closest to the spigot of money, they get first dibs, and by the time the regular person realizes what's going on, it is way too late. So we want to outrun this. Like, we want to know how this works, and we want to make sure that we are ahead of it. So this is a chart for bear markets that I managed to find. So bear markets in historical perspective, and we are, as you can see, near the beginning of the historical moving average, if you want to say that. So that this is why when I was saying I'm gonna wait to look to start to buy stocks, this is why, because I believe we're in the beginning, and this winter will be kind of like the first moment where I will start looking for real estate and stocks in particular. And let's
Winter is
hope
coming.
this. I'm sorry, what was that?
Oh, I just said winter is coming.
Yeah. And let's hope it's just one winter and not, multiple. So this one I pulled from a how the economic machine works. It's a video of Ray Dalio on YouTube, and I recommend just going and watching the whole thing. It's about 30 minutes. It's very informative. Um, but the the short the short of it is that we're in the deleveraging cycle of the business cycle, and we do have a problem because if I can grab a pen. Normally, this curve is not that bad. This deleveraging is not that bad. However, if you've heard the term kicking the can down the road when it comes to like the government and too big to fail for companies, so that essentially instead of a small curve is created a very, very steep curve. And now the downturn, instead of being something that is more akin to this, now it's multiples um, more severe than otherwise. So this is the problem that we have right now. And how long is this gonna continue? And what is the consequences? And what's gonna happen in real life? Well, God knows. But once again, have a plan and then a backup plan. All
Yep,
right.
and then
So now we
hedge against that, right?
exactly
That's
now
what we're talking about, guys.
now we're getting into the meat and potatoes. So types of investments. There's three main ones: the protection of purchasing power. So this is things that will hold basically their real value. So let's say a physical gold. If you buy a bar of physical gold now, it will probably um, cost the same in 50 years, right? Yeah, the real value price, not like the numerical number. I put Bitcoin in this group because I do believe that Bitcoin is a protection of purchasing power. Time will tell, but as of right now, I consider Bitcoin as essentially digital gold. Then we have passive income. So essentially, buy something that pays you to own it. This is, explains what it is. Stocks with dividends is like number one. Then rental real estate, and then bonds. We're gonna come back to bonds in a minute. And then active income. This will be, if you're employed, running a business, or any day trading. All right, moving along. So now we have the portfolio examples. I have 4 of them. So the first one is the 60-40. So we have 60% in stocks, any stocks, but dividends are preferred since you get paid to hold the stock versus a stock that just sits there and you won't get any money until you sell it. Then we have bonds. Now those are the 2, the 5, the 10, and the 30 year. And the current rates are between 2.5 and 2.8, which is obviously way under inflation. This is why I will avoid personally investing in bonds because the yield is like it's too low for me. I don't think it's. I'd rather have more stocks with dividends.
But it is more low risk, right?
Correct. So lower risk but lower return. Also, I should mention that all of this is essentially the extra money you have. So you have some kind of like running costs, like rent, health insurance, uh, anything that you have to pay, and then you have like an emergency fund, and then the portfolio is like everything else, right? So this is not like literally 100% of your money. Then we have the 10-80-10, 10% physical gold and silver, 80% things that pay you to own them, uh, preferably stocks with dividends and real estate, and 10% speculation and high risk return. So any crypto, NFTs, and anything like that. Then we have the Jacob Fugger model: 25 cash, 25 stocks, 25 gold, 25 real estate. This is pretty simple. And then we have the Dragon, which is the latest one that I found, and it's more complicated. We have 24% in stocks and ETFs, 21% long volatility assets. So these are options. We have calls and puts. So um, calls and puts and options in general, they're just like a whole different animal. Um, we might want to do like another presentation on those later on the path once we get
Sounds
involved in
good.
stocks. Yeah, because you can hedge your stocks with those. Then we have 19% gold, 18% fixed income. So these are dividends, essentially bonds or treasury notes. Treasury notes you can roll. I think you can have like a monthly one. So essentially it's like a bond but like shorter term. And of course, since the yield is so low, to make sense, you need like a lot of them. And then 18%, they call it commodity trends. So that's essentially you park that money into like an actual hedge fund, or you can do ETFs and options to kind of hedge against the main trend. So this is once again my opinion on crypto. Bitcoin is a protection of purchasing power, and then everything else I treat as speculation. Um, Again, my personal opinion. And then I did a little bit of a breakdown. This is a napkin math to see how much money do I need and how much shares do I need for a certain income per month. Because on top of everything, I gotta pay taxes for that income, like capital gains taxes. So I'm using a Rio Tinto. This is a mining company. Share price of 60.81. Yield is 12.59, which is quite a bit above average actually, which gives you $7.92 a year per share. And I'm using a capital gains tax of 20%, which may or may not be higher depending on your overall income and state, etc., etc. But we're going to use 20%. So if you want a monthly income of $2,000, you need about $221,000 parked in stocks, and you essentially you cannot touch them because if you sell your stock, your dividend drops, and so on. But as you can see, my goal is about $1 million parked in various dividend stocks, so you can get some kind of decent income uh, that will outrun inflation. All right, and over here, this is my portfolio, as I shared last time on the live stream. But this is if you typed it in, it's on shared, so you can go in, you can see all my tickers and any changes I do. This is the general breakdown. As you can see, I'm going heavy on um, minerals and technology. Pretty much half the portfolio is minerals, um, because I do believe we're in a super cycle for minerals. So anything that makes batteries and then also oil. And as you can see, I have quite a bit of tickers, but obviously I'm not buying every single one. I'll be picking and choosing, um, preference to high yield and high dividend ones. And this is just a best performing stocks and worst for 2020 so far. As you can see, it's pretty much all oil and gas and minerals. We have a few medical um, companies, medical biotechnology, but primarily oil and gas. Since um, drilling new oil and gas wells is practically impossible right now, and anything existing is expensive to like maintain, and also I don't think it's allowed to build any new processing plants, which means that what we currently have is what it is. But the world continues to need oil and gas, so the prices keep going. Is going to keep going up, and that is that.
Awesome, awesome. Thank you, bro. I got one question for you, and then maybe other people have questions. If anyone had a question, I guess my question was: you mentioned that when you're the portfolio diversification, you said that it's a certain percentage of your money. Like you're gonna have savings, you're gonna have money for your rent, all that stuff that has nothing to do with the portfolio. And obviously, this is contingent on how much someone makes. But what percentage of your income needs to be going to your portfolio? Would you say?
This has to be a personal decision. The way I'm doing it is I have basically all the stuff that I have to have. So my rent, I have to have rent, um, um, health insurance. I have a food budget. I have a gas budget, and then I have fun budget, and then I have 6 months. So that sum multiplied by 6, and this is maintained. And it's like this is my don't touch pile, and then everything on top of that right now goes into trading. But if I start diversification, I'll probably do a variation on the 10-80-10 portfolio. So 10% in Bitcoin, 80% in stocks, and then 10% in some kind of high risk reward. So maybe Ethereum, because I don't know if I'll be able to get like physical gold, like gold coins. But if I manage to get some gold coins, part of that 10% will be so split between gold coins and then Bitcoin, and you can do it like on monthly basis, so it doesn't have to be like every day, right? So
Right.
every month, at the end of the month, you're like, okay, this month I made X, and I'm gonna split it, so on and so forth.
Okay. And then what do you think about like index funds or like, retirement accounts, especially like a Roth IRA, something that is not taxed by the government?
Okay, so I have not done like a deep dive on those. Um, Actually, you're still taxed on Roth IRA. It just when you start taking the money out,
Right.
so you can't evade taxes. I mean, it's yeah. Um, my problem with those portfolios is that like how much of in control are you of what's happening to the money? And my experience is so when I was in my company, there was 401k, right? And it was pretty good. So if you put 3% of your paycheck, the company matches the 3%, and if you put 2% more, the company matches 1%. So if you put 5% in your company, you get
Right.
essentially was it 9% of your paycheck is put into this portfolio. However, there were only 3 options when it comes to investing the money. One was um, uh, one was defensive, one was literally the average, and one was risky.
Right.
Right?
But see, that's
Yeah.
different than like when you do a 401k with your employer, that's different than doing a Roth IRA on your own through like a brokerage like Fidelity, where you pick the index funds, you pick the mutual funds that you go into, right?
Okay. As I said, I have not done like a deep research on those,
Okay.
but I would
Well, yeah, I'll speak
rather.
to that because that's actually how I invest my retirement because of the control. So that's something I did want to just kind of add on to what Mike is saying, is about the Roth IRA, which is essentially you can use that to you can invest in it. You can max it out. This is something in the States, so I don't know about other countries, but you can put 6,000 in there a year. So that's something where you can invest, say, like 500 a month, and you'll max it out every year. So you can just say, okay, 500 a month, it just goes in this retirement account. But with the Roth IRA, yes, like for me, I have mine through Fidelity, and I just, I went through and picked my specific funds. I started with stuff in transportation. I kind of deterred from that and now got more into medical, mutual funds. So I think that's a good point you bring up, Mike, is because we want to be investing in high risk, high reward, low risk, low reward, right? Moderate risk, moderate reward. We want to diversify. That's the whole point. You don't want to just go balls to the wall, all risking. So yeah, that's one distinction you should know, because when you do have a 401k and a retirement account with your employer, yes, they may match it, but the options are going to be so limited. I think Mike said he had 3, and they were just risk, based on your risk tolerance. And also to mention with those is they're the penalty. If you want to take out, right, you will get penalized large amounts on that money. So for those people that's like, oh, I'm going to pull out my retirement early, you might take a hit on 40%, 30% of it just because you want to get that money early. So that's another thing to be cognizant of. If you do, and this is all the boring shit no one wants to talk about. So I don't care. Like, Mike, I appreciate us because it might be boring. It's not like, oh, 1,000 pips, look at that entry. But these are things we have to, think of as we're adults and we start building our families, and we want to make sure our kids are good and we are okay. If we die, they're going to be okay. Or what if, I lose my abilities, right? My motor function. So this is very just, real life shit that we got to think about and prepare for. But yeah, I just wanted to bring up like retirement accounts, because I think like people don't talk about it as much. And I think that it's not looked at as sexy in this industry that we're in to, like, day traders, because you think, oh, retirement. First off, you hear retirement and you think job, right? And so you're saying, oh, I don't want to work anyway. I'm trying to retire now. Why would I have a retirement account? But it's not like that, right? You can be your own boss and put into your retirement account. And the thing that we have to realize as, we grow up is the game is rigged, right? The rich do get great tax breaks and more different benefits that maybe the lower tier and bottom low class not getting. But instead of saying, oh, scold the rich, oh, they're getting this, stop them getting taxed, the rich, like shit like that, flip your mindset. This is me. Maybe you don't agree. Maybe you think tax the rich, everyone should have equal wages. But my mentality now is, oh, the rich, they're getting all these tax breaks. How did they do that? How can I do that? Oh, fill out this form. Oh, open an LLC. Oh, get my car against the LLC. Oh, buy all my equipment against my LLC and use it as a business expense, right? So take advantage of the system that is laid out for you. But it starts by educating yourself. So yeah, I just want to thank Mike for just, even starting to open up our minds to think like this and start these questions flowing.
Yeah, I agree. It's a game, and we need to learn the rules.
Yeah. We had a question for you, Mike. It was from KR. They asked, why is silver so stagnant compared to gold?
Stagnant. I think silver moves with gold, so I wouldn't call it stagnant.
You want to, KR, you still there? You want to kind of elaborate? And yeah, the panel link is still up there if you want to join the panel. We'll be in
I
here
mean,
a
it
little bit
dropped
more. Let's see.
3,000 pips in 10 days. Yeah, I wouldn't call silver stagnant. I'll call it manipulated, just like gold, but it's not stagnant.
I think that no one talks about silver.
A price range.
What is silver symbol again? X
It's
G
XAG
G.
USD.
There you go. Okay. What were you saying?
Right.
Sorry, I cut you.
So KR is saying, I mean, in terms of price range. Okay. So silver is actually, let me back up. So gold and silver, the mines that produce gold and silver, they're not mining specifically. Well, they're aiming for gold, but there's a bunch of other stuff that comes out of the ground. So I forgot the ratio, but if you have like a bucket of rock, out of that bucket, it's like less than 1 ounce of gold. You know what I mean? So there's a lot of other stuff. So when they dig up these massive amounts of dirt and then process it, there's a bunch of other metals that come out, and simply the concentration of gold is really not that much. And usually with gold comes out silver and like copper and like iron, and simply when you break down the concentration of the metal per volume, gold is so expensive. It's gold. There's not much of it versus something like copper. Price of copper is like $4. Price of silver is 18, right? And
So it's more rare.
correct.
It's a more rare resource.
Yeah.
Yeah.
So that's why the numerical value is only, quote unquote, only $18.
But the structures are very identical. Like they move together either way. The precious metals.
Yes.
And with leverage, shit, we don't care. We're just trading it anyway. But in terms of investing or long-term investing, what would be more bulky would be silver, right? You would need
Correct.
10 times as much silver if you're trying to hold something physical. So, it'll be smarter to have that gold just to, save space.
Yeah, that's why they're saying Bitcoin is so much better, because all you need to do is memorize the password for your wallet, right? And just go over the border, because gold, they can confiscate the gold. They'll strip you naked on the border and they can take everything from you. But they gotta beat you up until they get the password, right? So,
but what if the internet dies and we lose all the satellites go down and there ain't no Bitcoin? Motherfuckers gonna want them gold bar.
no, this is when you want bullets and guns.
Oh man. But I just say that to say that gold's been around since, before Christ, man. Like, it
No,
ain't going anywhere. It's
right,
a
right.
resource, yeah. But
I have nothing against gold. I'm just saying that if the internet goes down and stays down, you want guns and bullets.
yep. But yeah. I like this conversation. I think that's all we have for questions, bro. We did have a few more people start to enter in the room, so I'm glad we did have an audience to see your presentation. But yeah, we will have it on the channel and all that. Super grateful for this. I would love for you to do a follow-up in depth. I know you're gonna kind of start going in depth, but maybe once every couple weeks, once a month, or whenever you want to, have a presentation for us so people can start to think more business minded and set their futures up for success and not just think about day trading, because when you had that perspective, I forgot what you called the third one. I call it like your hustle money. But you said like day trading, your employer money you make. What was the term for that?
Uh, steady income. Hold on.
Yeah, well,
Forgot.
yeah, something like that. I thought you had some type of some term for it, but yeah. So
Oh,
that's
active income.
just active income. There we go. Active income was just one of three forms of income, right? We had passive,
Yeah.
and what was the first one?
Well, the first one is protection of purchasing power.
Protection of purchasing power. So open your minds and don't think that, oh, all I need is a forex hustle. Start to have a holistic view of money and start to understand how money works, how you make it work for yourself, not just how you hustle and just think long term. All right, I'll stop Mac. I'll stop lecturing here. All right. Anything to add before we close off?
Not much. If you want to quickly check gold, if anyone's
Okay.
wondering about gold, I think it's gonna continue to drop. There's some equal lows that I'm thinking gonna get filled.
Yep. Definitely coming for the lows.
But yeah, other than that, summer. So I think August is when the Senate goes on vacation, and like the major banks and whatnot, they're also on vacation. So we might see a little bit of a slow period for about a month, and then Q3 is somewhere in September. So we might see movement, and then you have the pre-holiday rush, and then quiet down for Christmas, New Year, and then first week of January we're gonna go back to normal, and then we just have to wait and see like how this winter is gonna develop.
Winter is coming.
Hmm.
Mm-hmm. All righty. All righty. Super grateful once again. Thanks everyone who made it to the end. And we will be back next Tuesday. Tuesday, we're back on our regular schedule. All right, guys.
All right,
Thank you for
peace.
attending. Thanks to my co host, Mike V, as always. Peace out.